Investors often refer to the current bull market for stocks as being liquidity-driven, supported by ultra-low interest rates. The S&P 500 index peaked mid-August, and despite the widespread expectation of a December-time tightening, stocks have failed to reach higher ground. Investors are concerned not only by the uncertainty caused by the run-up to the election, but it seems also concerned by what happens after the election. And more recently, trade data from China seems to indicate weakening demand inside and outside of the country. Together, these worries have caused some stock market weakness. Here's a selection of technical observations of the current state of the S&P 500 index. First, looking at the health of the trend by joining the lows of February and June shows a break of the trend line. Second, adding Fibonacci trend lines to gauge potential retracements for stocks shows 2046 and 2000 as 38.2 and 50% targets in the event of a major pullback for equity prices. Third, the index has left behind support of both 50 and 100-day moving averages. You can see the 200-day moving average currently comes in at 2068, although it remains marginally on the rise. And the fourth point to make on the daily chart is the weakening tendency of the relative strength indicator, RSI, since July, despite the buoyancy of the market. In addition, comparing the current RSI value with that of the August low could be used to depict confirmation of weaker prices. Finally, turning to the monthly chart of the S&P index, using the MACD indicator reveals last month's cross higher was simply a fleeting glimpse. That cross higher in September was the first since January 2012. However, it is important to note that the second half of October still remains, and so this concerning piece of evidence might yet disappear. That's all for now from Traders Insight. For more market color from all of our contributors, join us online at ibkr.com/ti. Hello, thanks for checking out our YouTube channel. Subscribe by clicking the button below. And over here, check out the latest short videos, market color, and digital exclusives.